Hi, my name is Nikita Veryandap with A&D Mortgage, and I want to welcome you to our A&D Market Digest. This is the periodic video discussing current market conditions in the mortgage industry and the second markets. The A&D Market Digest is brought up to you by our team of market analysts who are always keeping an eye on the latest trends. In each video, we discuss what's happening in the market and how it might impact your business. We always offer valuable insights and tips on how you can take advantage of current market conditions to grow your business. So if you're looking for a reliable source of information on the mortgage market, be sure to subscribe to our A&D Market Digest today. Now over to Alex, Head of Capital Markets. Guys, thank you so much for coming. Alex, Mike, it's a pleasure having you here.
Thanks, Nikita. Thanks for having us on this show. We're super excited and I bet it's gonna be fun.
Yeah, love the new studio. Thanks for the invite.
First question to you. What updates do you see in the conventional world?
Conventional world is developing very fast today. We've seen new products added like 3-to-1, 2-to-1 buy downs, and recently we had an update from agencies from Freddie and Fannie on the new LLPAs that will be coming in April, and we're incorporating that to our product matrix. Those updates are mostly focused on attracting more borrowers with lower FICOs and expanding affordability in the higher LTVs. I think it's a good move for the market. With the downturn in the mortgage originations, I believe agencies are looking to expand originations these days.
Any new developments in non-QM space?
As for non-QM space, there is also several developments. One of the latest one that we have is short-term rentals. We've been analyzing short-term rental space for a long time. We've been doing DSCR loans on the long term, and we see how that evolves, and we started looking at short-term rentals. We see that in the United States, for example, since last year there was a 25% year-over-year growth if you look at even Airbnb financial reports, which is public information. And since pandemic, this growth was 20% if we compare the pre-pandemic levels. That means more people in the United States travel using Airbnb versus booking hotels. That means more investors are purchasing properties in order to rent them on a short-term basis, and we are looking for ways, and we're introducing a program for our broker community to benefit from short-term rental income that borrowers are making on their properties. We are looking at online valuations like AirDNA. They have access to Airbnb and VRBO data. They pull the data on a regular basis, and that helps us estimate what the rental income is there for the property. I believe that would bring a good amount of loan production to A&D Mortgage.
Very interesting, very interesting. What do you think, what to expect from Fed meeting?
Well, the whole market was expecting this meeting, and last week we had several important economic numbers released. One of those is GDP data, which went out strong actually. It was 2.9 versus 2.6% forecast of annual growth, and part of it actually the consumer expenditures came out lower, 2.1% versus 2.9% expected. That means that consumer expenses are kind of going down, and Fed's movement on the rate increase works. People are spending less money, it's a good sign. And also PCE inflation data was released on Friday, which showed us that the inflation is cooling off a little bit. We saw a downturn in inflation, and I think both those economic numbers would support Fed's plan to have a 25 basis point increase for the Fed funds rate, which is, I believe, in line with the market expectation today.
So, Mike, many lenders, including the A&D Mortgage, are offering temporary buy-downs. So you say brokers and borrowers should consider a permanent buy-down. Why is that?
Sure, well, yeah, temporary buy-downs are very popular. We do a lot of them as well. But there are some shortfalls, right? Who can pay for the permanent buy-down fee? How do they qualify? They're going to qualify at the higher rate. So there are borrowers that don't get to take advantage of that. So we like to offer permanent solutions, right? So they can buy down discount points into the rate and get that lower rate and qualify at that lower rate.
I see. So how does it actually work? How do we permanently buy down an interest rate?
It's actually really simple, right? So A&D Mortgage on our non-QM products allow you to buy down up to 2 points of discount fees into your new loan. So for the example, I think we have an example here. We're looking at a bank statement loan where the par rate was maybe 7.625%. But they could buy that rate down to all the way down to 6.99 with a little less than 2 points of discount. So we allow them to finance that into the loan. They get to qualify at that lower bought down rate without having to pay any money out of pocket.
Wow, this is excellent. So do you think any additional details we should know?
Sure, there are some limitations based on LTV and occupancy. You need to read the full guidelines and you need to have a conversation with your A&D Mortgage AE. But for some borrowers, it's a great option. And I think you should reach out to A&D and get more details.
That's what I think so, right? We thank you for taking the time to watch our A&D Market Digest video. We hope that it helped you gain valuable insights into the current mortgage climate so that you can confidently advise your clients and make moves in the market. We invite you to follow us and stay tuned for more videos like this, designed especially for mortgage brokers. Until next time, keep it creating success stories.